Brian, let's start off here with pricing power. I guess we did see in the earnings release and on the conference call that you were able to sort of, tweak your pricing a little bit here to account for some costs here. How much power do you think you have to keep doing that going forward?
Yeah, well, thanks for having me. Obviously, we're very proud of the results we just released. Pricing played a role in our delivery channel business. I think that's what you guys are referencing.
Yes.
Where obviously the costs associated with that access mode are a little bit higher than other access modes. And, we've seen little resistance to the pricing associated with that channel. But in general, the Chipotle business has a really strong value proposition. If you look at a chicken burrito or a chicken bowl at our restaurant, you're getting high quality ingredients, customized, really convenient, speed. And when you look at that in others that are in the fast casual space, it's pretty tremendous that you can still get that for less than $10. So, we're really well positioned from a value perspective. And then when you look at various channels, whether it's the delivery channel or the order ahead pickup channel or the dine-in channel, I think we also provide great value solutions for each of those access modes.
Brian, let's talk innovation. Let's talk about the costs going in terms of your ingredients, because I'm hearing from Taylor Riggs on our show that cauliflower rice is where it's at when it comes to Chipotle. And I understand that actually got a bit more expensive. I mean, avocados might too. How is that impacting your business?
Yeah, sure. Look, we're always buying fresh, produce, whether it's avocados or, in the case of cauliflower. Cauliflower rice has been a real success. Obviously, people are looking for that non-carb solution. And the way we prepared it, the culinary behind it just makes it delicious. So we've had that on our menu for a time. It's actually coming off the menu in May. But I'm sure we'll come back to it at some point.
Oh, my gosh. You're going to break Taylor's heart here. She's a big cauliflower rice person.
Maybe I can change your mind by the end of this interview, Brian. Keep it on the menu just a little bit longer. Can you give us some real-time insight? And I don't want to harp on this too long about the higher cost, but, we just came off when we're talking about the planting season for corn, huge demand for a future planting season from China, dealing with some of the food shortages and that food inflation. When you're talking with your suppliers, how are you thinking about some of the input costs into your business? Is there a real-time update you could give us about higher corn, for example?
Yeah, so we've not seen our key ingredients experience any meaningful inflation. And fortunately, our supply chain has really weathered kind of the ups and downs of this COVID time period. So we're in a really good position right now. Obviously, markets change in this space, especially, as you mentioned, if the corn growing season's having a problem, we'll deal with that accordingly. But as of right now, we're not seeing it in the ingredients that we purchase.
Yeah. And I hate to keep harping on this, Brian, but when we talk to investors, particularly in this environment, they're happy with the growth, the revenue growth, but everyone's concerned about costs. It's not just food costs, but a lot of people are now talking about labor costs and trying to hire people, particularly those people who left the workforce here. Are you seeing any pressures there, any challenges there in getting employees back or hiring new employees as you sort of build out your strategy this year?
Yeah, look, one of the things that's definitely happening is our business, as you saw in our results, right? Our business really accelerated in March. And there are a couple reasons for that. Obviously, vaccine rates went up, COVID cases were going down. People were definitely out and about a lot more. And, they received stimulus payments. So I think they were really excited to get back out, be social, go to restaurants. Okay. Now, the good news is that drove a lot of new business for us, really nice results in the quarter. The challenge is we got to catch up with now our hiring for all that new business coming in. And it takes us a couple weeks to catch up. What I'm happy to say is where we put an emphasis on hiring, we get great responses. Frankly, the challenge that we've seen over the last 30 to 60 days is once we get people hired, keeping them in the business for 60, 90, hopefully 2 years so that they can have a longer term career with us and ultimately become a restaurant manager where they're making $60,000, $80,000. But right now it's very competitive. So the employees that you have, they're probably seeing more alternative employment opportunities than they ever have, especially in those traditional restaurant jobs. So it's very competitive. We believe we've got a unique employee value proposition because Our company is different in the standpoint we have this purpose around cultivating a better world, food with integrity. And then, we've got tremendous growth opportunities. So you may come in as a crew member, but you could quickly find yourself running a restaurant in, a year or two.
Look, talk about those growth opportunities, Brian, because you talk about how strong March was, vaccines, but also stimulus checks, which are at the moment no more. Is that sort of pace of growth, that upbeatness that you felt in March carrying on into April, on into the spring?
For us, so what we talked about in our results was really looking at our 2-year geometric sales performance. So we were running think about this on a 2-year basis in the 20% range. In April, we've continued to see kind of low 20s, high teens. It's bouncing around a little bit, but what we are seeing is there's still a lot of consumer demand to be had as people get out and about and return to their normal work schedule, kids going back to school, youth activities reinvigorated. So the consumers saved for the last year with a lot of the kind of quarantining and staying at home. And I think they're ready to be social. They're ready to get out and experience a meal with each other. So I think we're really well positioned for the balance of the year.
Brian, finally, we have to bring you up to speed on news of the day, which is really the news of the last hour or 2 hours, is a proposal to raise a capital gains tax double up to 40% from 20%. How are you thinking about higher taxes? Can you respond to a higher capital gains tax rate proposal? Are higher taxes something that you're prepared for?
Look, I'm just hearing the news like you. Obviously, we've got to digest it and figure out what that means for our employees and what that means for our customers. But what I've traditionally seen is wherever the administration ultimately goes, this is a starting point, and I'm sure there's going to be a lot more debate on the conversation, and then we'll work through it accordingly.
Do you support higher corporate taxes, Brian?
I'm sorry, what was the question?
How about corporate taxes as well? Is that something you're analysing, and would you support or be wary of?
Look, I think as we're a business that is pretty much all U.S., right? We've got, call it 100,000 employees. They're all in the United States. Obviously, if you raise corporate taxes, it has some implication on our earnings ability and then our ability to reinvest in our business. But, we are delighted to be a U.S. company. And it's the same spot where I've heard a lot of different things being proposed. I think we're still at the very much starting point on this. If you go extreme, that's probably not a good solution. However, I'm sure there's something from where we are and where some of the numbers I've heard being discussed could land where we could still operate our businesses in a really effective manner.